I mean, like for instance, right now I'm in like 25 positions that are bullish, and they're up 32% max profit overall. Okay, we're going live here, and yeah, it's like 2 grand. I'm lightly allocated too, Randy. I'm probably not as allocated as I want to be, but hey, no, I'm pretty happy because it's hard to find nice, perfectly set up opportunities out there. And I'm in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 1, 2, 3, 4, 5, 6, 7, 8, 9. I'm in 19 bullish positions. So I'm happy. You're still in 7. Looking to relocate. So now, why are you in so few? And I guess it's just a sign of the way things are right now. And I'm really happy for you, though, that you're managing everything perfectly and you're making money and it's working. But just remember, law of large numbers, and that when you really get this going, you're going to feel like crap that you're only flexing 10% of your portfolio is your buying power. You know what I mean? So, mm, anyway, that's the next level, trying to get this just operating right is level one. But the next level is becoming that capital manager of your own money. And almost the job, you know, running the system is almost becomes secondary. Like that, you got to get down. You have to get the system down. And then once you do, then, your real job is just capital allocation manager and, what to do with cash at that point. And it does become, hey, I need to make wise decisions. Like you go, okay, there's cash available now. Uh, as a capital allocation manager, you have to say to yourself, okay, no, honey, I gotta sit down for the next 3 to 6 hours here and make sure that our money's invested. And it becomes a priority. All of a sudden, your capital allocation manager hat becomes a priority. But then in that priority, then all of a sudden you go, okay, so now I'm handing this off to you, Randy, like you say to yourself. I'm sitting here. My capital allocation manager has just taken the helm, and now I give to you, Evan, or I give to you, Randy. You say to yourself, what do we do with it? Can you go find me an opportunity? You're the expert technical analysis. You're the expert chart reader. You're the expert liquidity checker. We need to locate capital. Go get them. And so there's like these two roles, and you just absolutely have to master the chart reading, the technical analysis, the liquidity checking, running the system, the mechanical side of the system, get that going. So what'd you say? Not my plan, just following. Looked at about 150 charts yesterday. Wow. Way to go. Let me see if I need to make this bigger here. Hang on. Way to go. And so my eyes crossed, making way less mistakes now, so it's starting to show. Yeah, that's awesome. And you've been doing it, I think, for what, 4 months, let's say now? Or has it been five? Four, well, I think it's been about 3 or 4 months. You honestly are just progressing so fast. I mean, I can't think, I'm trying to think of other groups that you could have joined, that I know of that are like reputable groups, that are great groups, and I can highly recommend to anybody who wants another group to join. Um, but I really don't think that you would have learned how to read charts, how to be on top of your positions, entries, checking liquidity, exits, managing the mechanics of all that. I don't think you could have learned that in 3 or 4 months anywhere else. I uh, am definitely proud of how well some people can learn from what I'm trying to show them. So I love it. well, for sure. I love teaching you guys. But it's always up to the student. You know what they say, I'm thinking of two sayings at the same time here. When the student is ready, the master appears. The master's always there. He's waiting, but he ain't going to teach somebody who doesn't want to learn. So he's not coming to you. The master's not coming to you, but he's there. He's right out there within your reach. And when you're ready and you've hit rock bottom and you're humble and you're not going to be talking back and you're going to be all ears and no motherfucking mouth, that's when the master appears. And until then, your ego is ruining you and you need a mentor and you've got to shut up and listen. That's just the way it goes. And when the student is ready, the master appears. And it's usually in that form. And then the second saying I was going to say is, you can lead a horse to water, but you can't make it drink. you know? And so, some people, and probably that started to also get into like cast not pearls before swine, right? But luckily, everyone in here is paying to be here, and so they've put some skin in the game, and they've decided, this is something I want, and I find just that barrier alone causes people to um, not be the kind of people that we wouldn't want to waste our time with. So, they all work together in that beautiful trifecta and get you guys in front of the screens here. And hey, by the way, Randy, I don't know if Randy, is your subscription with WAP or with I think the direct Discord? I think it's with the direct Discord. I got to get anybody who has a WAP subscription, make sure you put in the review, please, because those reviews help the group. The more reviews that we can put in, the better. I don't care if you want to give it a 3-star out of 5-star review. Obviously, I don't think we earn a 2-star, but if you can give a 3, 4, or 5-star review, great. More power to you. All right, look, here we are. We're live this morning. Mark, good morning, Mark. Reddit is up, like it was up 18% at one point. It's up 11% pre-market. Apparently, it's done well here and put in a very good earnings. Reported negative 819. Okay, I was under the understanding that they were profitable. They're still not profitable, it looks like. But it was a surprise. They've done well, and Reddit looks good, and it's a recent IPO, so the range that it can run is very fresh. So Reddit is something that we want to attempt to potentially get into here this morning. I'm going to check the liquidity on the options right now. Let's take a look. It's still fresh. All right, good. Wow. When something's fresh like that, you get a very nice view of it. Look at this. Here. We got 12 minutes till the market opens. So options trading, we got 38,000 at the lowest, 10,000 per day. Obviously, since IPO was really hot, but it settled down to probably an average of right here, maybe 24,000 per day. That's very liquid. That's what we're looking for. So good. The options on Reddit. That's what I'm going to be shooting for, is a put credit spread. But if any of you trade shares, fine, more power to you. And there could be a share trade entry today on Reddit. You'd want to put your stop at the lowest pivot. And usually on catalyst days like today, the low is the low of the day. Now, if the stock is going to fly, then it's going to fly. And so therefore the low of the day makes logical sense as the stop. However, maybe a little bit lower than the low of day, so it can just do its testing of the lows, and so the reason why I say that now is because you always have to pre-think where's your out before you get in, because we are risk first traders. And so by putting the low of the day as your stop, or even a little bit lower, and then having that distance from your entry to the risk point, you can know your size, and you want to size that to 1% risk in your portfolio if you're doing shares trading. So play it safe. But now if you look in the pre-market chart, look at this. You got the pre-market chart sitting right here on Reddit. You can see it already kind of double bottomed at 54. And it tapped a little bit lower. So you might even preemptively be able to think, well, if it breaks 54, I don't want to be in it, And you might want to even make that 53.50. Although probably a 54 break is going to be it for the thing. So, however, the strategy is at the open, let it trade for 60 seconds, let it trade for 1 minute once it opens. And if it breaks after that minute, the top of that first minute, then you can try for a long. And sometimes that happens on the second, third, or fourth minute, or even the fifth minute, and it comes back around, and then it breaks that first minute open. That first minute open is pretty critical. It's the highest volume, moving forward on the day, highest volume moment. Other things to think about, though, regarding that strategy for first minute opening range breakout on a catalyst day on a stock. This is a catalyst day. By the way, while I'm talking, can somebody check the volume on Reddit, the pre-market volume, please? The secondary potential entry, and this can happen even before the first minute, but the risk is higher that it won't work out. However, it's a very interesting point to get in, is the inner pivot breakout. That'd be this one right here, the sort of medium top level price point that was in all of the after hours trading. And that is 57.80. So 50, okay, Mark, perfect. I kind of doubt that. Well, okay, I would think it would be more, but I'll check on that in 1 second. 57.80 is a preemptive pre-market pivot level break point. So 57.80 a break of that could mean solid energy, and things could be breaking out from that moment. 57.80. So you might want to write these down. 57.80, and then 1 minute opening range breakout, and then 53.50 is your risk to stop. Should that happen? 57.80 to 53.50 is what am I'm trying to do in my mind? $3.30, I think, but 780, 53, no, $4.30. And so then you say to yourself, okay, well, I've got, $43,000 account. 1% of my $43,000 account is $430. It happens to be $4.30 to the stop. So therefore I can get 100 shares. That's the 1% rule. Anyway, then the second, so that's the second. First one is 1 minute opening range breakout. Second is inner pivot pre-market breakout. And then third is pre-market high. And that would be all the way up at 60.18. So 60.20. You kind of got to round them. 60.20. So those are all signal points if they break. Right? And they can domino, and it can just blast through all of those. Just make sure you set your risk to stop at 53.50. Now, if all those don't work out and it starts bleeding out, then presumably we would want to get a 5 minute, we want to fall back to the 5 minute dip buy strategy. And that is, we watch the 5 minute candles and we get in the first 5 minute candle that goes over a prior candle's high since the open. There will be that first failed 5 minute candle in that situation because it's a fallback plan. And so then it will have to put in further candles, or maybe even on the second 5 minute candle, it breaks the 5 minute high. That'd be similar to the 1 minute opening range breakout. If that high is the 1 minute opening range, well, see what I'm saying? No, it would be, because you'd be in on the 1 minute anyway. So 5 minute is a dip buy, is a fallback plan you can go with. And at that point, you can get in. Now, we like only these kinds of plays, catalysts, entry plays. And by the way, obviously, if you're doing put credit spreads with me, then we'll be looking at the option chain and we'll be getting it over there. Now, usually, however, with these kinds of plays, we want to make sure that there's a projection of at least 2x, ideally 3x relative volume. So in pre-market, whatever the volume is on catalyst days, usually you can project the end of day volume, the total volume on the day, to be 3 times whatever the pre-market volume is. So you said volume so far is 600,000. I'm going to go take a look at my numbers as well. Yeah, I show 600,000 as well. If anybody has another figure, it's always helpful to get from different systems and stuff. So that means 1.8 million per day. What we need to know is, what is the average? The average is 2.5 million per day. So we can see already that pre-market, the action level is actually not that strong. So that's one semi disqualifier, or it's like, in your thesis of cards stacking, that's one negative card. Like, it doesn't really have, sizzling, slamming levels of volume projected out. But by the way, sometimes things that project out at 3x from their pre-market volume, sometimes they trade 5x or 10x the pre-market volume by the end of the day. So it's not a hard and fast, rule. It's just a rule of thumb. However, this is a little bit falling short as a projection. 625,000 will project out to be 1.875 million shares by the end of the day. The average is 2.5 million shares. Reddit. Yeah, there it is. So that's short, not by a whole heck of a lot, but that's odd. So we hope to see a huge pickup in volume by the time of our entry. And then we can probably bundle the first 5 minutes of the day into that figure and project it out 3x from there. So we'll have a little bit of help there. The second thing that we want to make sure and look at on these gap up catalyst day type situations that we're looking for entry on is, what was the move? Was there any consistent direction that people had been getting into positions in prior to this? And we can see here on Reddit, look at the chart, that it had been going up from a low of 40 all the way to today. So this is yet another negative, because if so many people, we have like almost a month of buying from 40 to 50, and then it popped. So definitely a percentage, I'd say around a third of a month's volume is going to be taking profits at the open. If it makes progress at any points, then depending on those people's size, they're going to be pushing that big red button, and it's going to, when it gets up to some level, and so that puts it under a lot of pressure. Had price been moving down prior to the gap up, that creates a panic buy, like a FOMO situation. All of a sudden, everybody who was getting out wants in, and like, oh my gosh, what a surprise, and then some of those people that were uh, investing in the down move might have been selling to open, in other words, shorting. And so now they got to buy to close because they're majorly underwater. And so that buy to close creates buying pressure. Anyway, that's not the situation here. We have the opposite situation on Reddit. So we expect Reddit to kind of bleed out. Maybe we'll default to the 5 minute strategy in that sense, but it might just bleed out all day. We'll see, because the low volume and because of the gap theory analysis that I just told you about. However, an 18% move, however, that is now 11%, is pretty good. By the way, the market is down, and that's going to add further pressure to Reddit. Unless the market goes green from the open, in which we'll be able to see that fairly quickly with our meters, our 3 meters right here. So let's see, sell H, let's put Reddit right on this screen. We'll watch it exactly how it moves from the open. And if it wants to be a good opportunity, we'll let it speak to us. We don't guess anymore. I mean, in the first, I don't know, it depends on, like, I came from, prior to the internet being pretty resourceful place, and took me many years in the beginning. But you guys can, in about 1 year, you guys can get to mastery, if you just go after this like a bull all day, every day. All right, W and PRMW stocks that I wanted to look at are triggering. Let's see. Let's take a quick look at those. Okay, no, no, not too much of a big deal there. And then PRMW, I think it said. Yeah, that stock is amazing. And anyway, it has earnings in a couple days. So back to Reddit. We are now 45 seconds into the open. And unless my quotes are delayed, I'm not seeing much movement on the market. It seems very light. All right, how much volume has traded so far up to this first minute? Let's go look. Reddit, 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 Reddit. Only 653,000. See, this is too light. The relative volume. Then look at Reddit. It's bleeding out. See, that's the issue. There's not enough actual new interest to get in compared to 1 month of people who would love to take a profit here. Now, they might not take total profit. They might only sell 10, 20, 30, 40, 50% of their position, but it creates pressure. It creates pressure on that stock. All right, looking at our meters, we actually are moving green for the most part on bigger sized growth opportunities from this pulled back open this morning. So maybe that's the way the market was going to move. Let's take a look. At the moment, no entry on Reddit, and the market is moving up. At the top of the list, we got AFRM, which must have opened well. A very big move a little while back. Let's measure that. 224% in 56 days. It's practically a holy grail AFRM right now. So I have a great interest in AFRM this morning, just for the fact that maybe it will work out. It's just not a beautiful blue sky signal. It's moving into congestion area, a huge congestion area, but it's a worthwhile try, especially with a put credit spread. So looking at that, and checking the deltas, we'd be talking about the 32.5, which puts us at about right here. God, that's so close by. That's too close by. And the bid-ask spread is a bit too wide, and we'd be getting 80 or $80 or 170. So it's about a 33% return. It's a little bit almost too good. It's a little concerning, when it's really great like that. Just feels like it's going to get hit. Maybe we could get the 16, the 17, the 30, 27.5. Always we're talking about the June 21 right now. That one's more realistic, $25 out of 225, and that's only 11%. So there's something funny and wrong about the 32.5 on AFRM. The pricing just hasn't adjusted correctly, and the bid-ask spread is like 25% wide, so that's not good. All right, the market's going sideways. Tomorrow we got jobs numbers on the market, and so that may cause the market today to just be light. It's been fairly non-consequential the last couple days, and dependent on earnings releases. I mean, today, right now, we're at where we started Monday. So we've literally made no progress in the last 3 days. So this market is neither here nor there right now until tomorrow, probably, when jobs numbers come out in the morning. And then on Friday, we have consumer sentiment. See, now that the meters, look at that. See, now the growth lists have turned probably mostly red when you take them all holistically there. They turn mostly red, so that's not a great sign at the moment. Things can change. for the market. Now, looking at Reddit on the daily chart, you can see that it's rejecting. It's pulling back, and exactly as I said, there's going to be profit taking because there's a month of pressure there. Even if they sell, even if a third of them sell half what they have, um, that's 16% of a month's volume selling. And if the daily average, which is 20 days, is whatever it is, and we're doing 1/6 as selling volume, then there's 2.5 times or whatever that is, 12. There's three times as much selling volume predicted on Reddit today than buying volume based on the volume analysis and everything else. Did everybody understand that? Like how I came to that? Because there's 20 days in a month, trading days. And I'm saying that out of that month, 20 days, a third of people are probably going to sell half their position. There's a pretty good assumption. And so that gives us 10, third, 3, I guess 3 days, if that's correct. 3 days of selling pressure times 2.5 million is 7.5 million. And we're projected to do less than an average day today of 2. So actually it's like 3x. So we have like 3 times the selling pressure today. That still, however, I'd be semi-interested in a 5-minute dip buy because you never know the way these go. It's Reddit, it's an IPO. This ain't just nothing. But look at that huge red candle at the 5-minute red candle at the open. This candle, this current 5-minute window is not going to get up and over that. You can know that. Well, it would be an amazing reclaim if it did. But it's going to, maybe the high of this 5-minute candle could trigger. And in that case, you would go to the pivot low to set your stop, 51, which I think if we remember right in pre-market, yeah, we broke below the pivot lows of pre-market and after hours trading. Excuse me. So this stock is kind of in a free fall. I'm going to check really quickly on the options, potentially getting a CCS on this. So that'd be a bearish trade. Let's at least take a look. Delta, we could be talking about the 65 level. Okay. The bid-ask spread is insane. I can already see that, but just out of theoretical curiosity, yeah, and it doesn't pay well enough. $67 for $433 of capital is 15% for a 24 delta. So that's not going to work. By the way, masterclass tomorrow night. Try to think about the stuff you want to talk about. You'd like me to cover. I'm happy to cover it. Don't forget masterclass tomorrow night. All right, so Reddit's not happening. This one is green on all metrics. INOD. Yeah, that's just not liquid enough, but yeah. INOD is flying on this very similar situation, a gap open up above the 200 moving average and a bottom reversal. It's good stuff on INOD, INOD for shares traders, but the liquidity looks way too low on the share side, and you can expect the options to be far, far, far lower than that. Seed, is it? No. Yes, Seed is another interesting opportunity this morning. Randy says, I just got a 52% return on capital exit on Sell H and a 52% return on capital on Pinterest. Wait, no, you got to stop saying ROC because it's not ROC. You did not get a 52% return on capital. You got a 52% max profit exit on Sell H and a 52% max profit exit on Pinterest. You could say like 52% MP or a plus 52% exit because we already know their spreads on Pinterest from yesterday's put credit spread trades. Really? So I should take a look at mine then because didn't I get in some of those? I'm not seeing. I didn't get in Sell H. Well, good for you. No, I did not. And then what was the other one? Pinterest. Good job. Where is, let's see. Oh, I thought you had been in Pinterest for a while. How the hell did you get, are you, are you serious? In one day, got that much return on Pinterest? Because it didn't even move that much from yesterday's close. It's even down. You know what? Did you really? Number one, verify that before I move on to talk more. Wow. That's crazy. So that what happened was you probably were able to snipe an arbitrage moment in a what is it? How do you call it? An inefficient moment in the bid ask spreads of those options. That's a that's a great example of why putting in those orders good to cancel and letting them sit out there like bait is a great idea. That's like having your fishing poles out because I highly doubt that Pinterest is up. It's not even really up. It's just barely up. Yeah. Okay. So just to double check, check filled orders right now. Turn the arrow on filled orders and check what price did you get? Check what price did you get over in filled orders. Gonna double check some stuff here for you because that is outlandishly crazy. Maybe you've got your exit set incorrectly. I don't know. We'll check in a second here. But give me the figure right now. Over in filled orders, what was your exit price for that spread? All right, the market looking pretty okay. Okay, you got a screenshot for me. All right, here we go. Yeah, that prevents any problems. Yeah, you didn't give me the columns. So I know what the fuck I'm looking at here. Let's see. 41.39 cents. Okay, you got out at 9 cents per contract for 10 contracts. Okay, just FYI, you got out at 9 cents. Okay, per contract. Now, do you see that there? Number one, verify that you are following me so far. Okay, now click on the one called account statement. So it's monitor tab, activity and positions, account statement. Click account statement, type, I forget what fucking stock that was. Type the stock name, Pinterest, Pins, into show by symbol. And then make sure the number of days back from today is set to like 100 days or something. Just change it to like 100 days. And then look at what your original entry price was and tell me that. And it would be a red trade because you were selling to open. Like that was a green one that you showed me that was bought to close. This would be a red trade. Oh, look, you guys. So because the market is moving up, we now have a majority green moves from the open on a lot of stocks. NRG is such a great stock. Am I in it? I really should be in it. Hmm. I'm waiting for it to get back up above this level. NRG is doing really well this morning. 18 cents. Okay. And it's a red one. It's a red looking order. All right. So you did that correctly. So that was correct. Okay. All right. Well, good job. So you did it. I mean, I just wanted to double check, make sure you didn't get screwed or something, or you're doing something wrong, because it barely moved. Oh, you know what could have happened is yesterday you got in at a really good price, like in the morning. Oh, here's your order. It's going to tell me when you got in. Possibly you got in the morning. Let's see. Nope, it was close of day. Okay, what the F? You got so lucky. This is just like this is a prime example, like a great example, almost a teachable example. Probably we could talk about it in a master class of why going ahead and setting your 50% take profit exit as a good to cancel order and just letting it sit there out there is a great idea. Because Randy got two of those this morning, and I think that he probably should not have. I'm going to go check. Watch. I'm thinking, I guarantee you 99% that it's not 9 cents anymore. Let me go check. Pinterest, which option was it again? Let's see. The 38.37, 21st of June, put credit spread, Pinterest, 38.37. Actually, yeah, it's pretty good. It's 11 cents right now. So I could see how it could have hit 9. That's just crazy. Crazy good trade, Randy. Well done. Just well done from start to finish. And now you need to be scrambling. Where are you going to put the money? Where are you going to put the money? Because that's what it's all about. Because you got out of something quick. Time to time to keep putting it to work. Keep putting your money to work. All right. And the other one you said was what? Meta? No. What was the other one you got out of? We don't need to go so detailed into that. I'm sure I can see that clearly. Yep. All right. Yeah. Well, good job on that as well. Fantastic. Okay, let's take a look at the Reddit 5 minute. Might be a dip buy going on. Bird in the hand is worth two in the bush. Yep, absolutely. See, look at that. 5 minute candles haven't triggered yet. They keep making lower highs. Chook, chook, chook. So there's no entry happening on Reddit yet. But the theory today is that there might not really be a worthwhile entry on Reddit, even at the 5 minute. And that's per the gap analysis. Everybody's going to just keep selling. So in my opinion, because of the gap theory analysis there, everybody was buying for a month. You don't even have a reason, a theory to get in. There's no thesis for long entry on Reddit at this point. So let's go take a look at what what else is up and hot today. Cart. I got to get out of my Meta, by the way. So let me close that down. I thought I did yesterday. Time to just close it down. Boom. There we go. That was a short position on Meta, which didn't get filled yesterday, and then it's worse off today. Okay, moving that to closed. All right, Cart. Did they report earnings or it's going to report? Okay, they're going to report earnings in after hours, so there's no trade there. We don't want to get in until the cat's out of the bag. Although it looks like nice buying up for the last bit, and this could create a lotto put. Free ER lotto put. We'll have to see how it closes. Cart. XPO. Is it probable, Randy says, is it probable that those two trades would not have been accepted if I wasn't in paper trade mode? Oh, that's a good question. I don't think so. I think you might have got those fills. I think it might have been slightly more difficult and potentially a little bit more sloppy. I still think you would have got those fills because I went back and I looked at the prices and it was at 10 cents when I saw it the moment I got there. And then it oscillated to 11 cents. And you got 9 cents. So I'm thinking there were plenty of people that wanted to accept your order for 9 cents right before that through the sort of, shaking of price that, when the volatility snaps, sort of like a needle on a seismograph when tectonic plates shift, when there's a difference, when the next day opens, right? You get that, right? And I think it would have hit that $9. I think possibly you probably would have got that. Yes, sir. Okay, I have something going on NTNX. I got to see if it's real or no. It's I have a great situation on NTNX, and yet the bid ask spread is so wild and incorrect. I have orders to sell though. NTNX. Yes, those orders are there. So I'm looking for a fill on that. All right, continuing to go down the list. Square, and the other one I was looking at was XPO. Yeah, Square doesn't look good. Maybe it's an Iron Condor. See, this is a kind of a good situation for an Iron Condor. Iron Condors are amazing for, the most primary reason is you get double the income because they allow you to put on the other side of the trade, a call credit spread versus a put credit spread. So you can have both of them. They allow you to put it on for free. It's ridiculous. It's free money. Not all your trades would qualify for Iron Condor type situations, and it can be very, you can get greedy about it. And so you need to be very, very careful about picking situations you want to put Iron Condors on. For the reason is if you get into something like a put credit spread on something and now you want to turn it into an Iron Condor by getting a call credit spread, if the thing is bullish, it's going to blast through the call credit spread side and it's just going to ruin the whole trade because number one, by putting a call credit spread on, it freezes sensitivity to up and down movement until it gets over any of your strikes. Then it becomes negative. It works against you. So you need things to stay in the zone that you create. And so, it's you got to have the right setups. But the allure is you get double the return. So when we're going for 22 to 25% return on capital trades, when you put on an Iron Condor and you can put the other side of the trade on, assuming it's symmetrical returns, it usually isn't. It's a little bit less, but assuming it is, then you get double. You'd be getting close to 40 to 50% return on capital in that amount of time, right? But you're not going to see like accelerated gain situations. That doesn't really happen with Iron Condors. You're just going to have to wait out the trade as price stays inside that zone and see the theta start dripping in double speed, which is great, but you got to pick them right. So for example, I'm in Tesla Iron Condor and it was a put credit spread down here. I got it in this put credit spread down here. And then we had this really great day on Tesla. And it seemed to be under pressure. It did well, but it seemed to be under pressure, and the market was kind of under pressure. And I had the hunch that that was going to be a difficult level for Tesla to continue from, and that at the worst, maybe it would move slowly, treading along the call credit spread break even line. So that allowed me to put a call credit spread on. I slapped it on that day. And ever since it's pulled back right to the damn center of my Iron Condor. It's like absolutely idyllic. It's just what you want because look at those dotted lines that fan out. If I draw over that where the center is, center to center, you get something like this. And so long as price stays along this line, and so far it kind of is, hopefully it doesn't just downtrend. That doesn't work for me. But I don't think it will. I think it, might do this kind of a thing, and it's just going to hang out right in the middle here. And so I'm getting double the income. So anyway, that's some of the fun of Iron Condors. But Iron Condors are like that's like year two. Like year one, master put credit spreads in a bull market. And then once you've really mastered the mechanics of all that, then you can move on to credit spreads 20 201, right? Isn't that what it is? Like in college, 101 and then 201? Or is it 202? 201. Credit spreads 201 and Iron Condors. That would be the class. the master class. So, but anyway, back to what was the one? Square? No, XPO. Maybe it was Square. We were just looking at one. Senior level for sure. I think it was Square. Let's take a look. What I'm saying is I think Square is like perfectly set up because it's just when a stock just looks like it's not really going to have a good possibility of it going up because there's a whole bunch of resistance, but it actually doesn't look like it's going to have much of a possibility of going down either because there's so much support and it just doesn't match thesis. That might be an iron condor situation because look, this um hyper what's it called? A hyperbolic no parabolic this parabolic cone here, or maybe they call it a hyperbolic cone, uh represents exactly where we would want our iron condors to be at 20 deltas, just where we want. And if you look, those are quite ideal spots because there's top line resistance right there. Like it's pretty safe to take a call credit spread somewhere up here, assuming that Square is under pressure. Number one, because of all that, you know, all those high prices that it's rejected before. And number two, because on Catalyst Day, it actually broke, it actually bled all day. And we know that is usually creates this sort of never look back on the other side moving forward, especially on Catalyst days like that. So we have a perfect thesis for a CCS, for a call credit spread. Now, how does it look down around 60, around the bottom of that for supportive action? Well, it looks pretty good. I mean, we got like a double bottom type situation. Every time it gets down there, down lower, it tends to get bought up. So I think, and it's right in the middle right now, it's right dead center. I think that this is a great candidate for an iron condor today. So um, I will probably be opening that up. All right. If there's no other questions, it's been an interesting 27 minutes of the open. The market is kind of flowing up. Nice. And if anybody wants to try the iron condor with me, I'll be posting what I get in the group. But thank you very much for attending the morning stream. Stay safe out there, trade smarter, and I'll catch you in the group. See you shortly.